Every year, 500,000 Americans face bankruptcy from medical bills alone. But the most dangerous moment isn't getting sick. It's discovering, at the worst possible time, that you weren't truly protected. In 2018, a firefighter named David Torres was driving home from his daughter's soccer game when his heart stopped. He was 42, healthy, active, and almost completely uninsured. His wife Maria would later say that the grief wasn't the hardest part. It was the phone calls, the hospital billing department, the mortgage company, the college fund that simply didn't exist. Here's a number that should stop you cold. More than 60% of personal bankruptcies in the United States are tied to medical expenses, and the majority of those filers had some form of insurance. They just didn't have the right kind, or enough. Nearly 30 million Americans have no health coverage at all. But the more invisible crisis is the tens of millions who are underinsured. People with policies that feel safe until the moment they aren't. A deductible of $6,000, an out-of-network exclusion buried in page 47 of a policy document, a life insurance payout that covers the funeral but not the mortgage. Insurance, at its core, is a promise. And like any promise, what matters isn't the intention. It's what happens when it's tested. To truly understand insurance, you have to go back 350 years to a coffee house in London. The year was 1688. Edward Lloyd's establishment near the Thames had become the meeting place for merchants and the men willing to bet on their survival. Ships sailed from London to the Americas, to Asia, to Africa. Most returned, some didn't, and no single merchant could know which voyage would end at the bottom of the sea. But here's what Lloyd's backers discovered. While the fate of any one ship was unpredictable, the fate of many ships over many years was remarkably stable. Roughly 3 ships out of 100 would be lost in any given year. Pool the small premiums from 100 ship owners, and the few who suffered catastrophic loss could be made whole by the many who didn't. This is the foundation beneath every insurance contract ever written. Risk pooling, the transformation of individual uncertainty into collective predictability. Actuaries are the mathematicians who make this work. A healthy 30-year-old male has approximately a 1 in 1,000 chance of dying this year. A 50-year-old, about 1 in 200. These probabilities determine your premium. Not a guess. Centuries of data applied to your specific situation. And here is something most people never learn. Term life insurance is among the most affordable financial products in existence. A healthy 30-year-old can secure $1 million of coverage for approximately $30 a month, less than a streaming subscription. There are 2 fundamental categories of life insurance: term and permanent. Term life insurance is protection in its purest form. You pay a monthly premium for a set period. If you die within that window, your beneficiaries receive the death benefit. If the term expires and you're alive, coverage ends. For most young families with mortgages and dependents and limited savings, it is the right starting point. Permanent life insurance covers you for your entire life. A death benefit that never expires and a cash value component that accumulates over time. Whole life premiums are fixed and build guaranteed cash value. Universal Life offers flexibility to adjust premiums and benefits as your life changes. A rule of thumb that financial planners frequently cite: secure term coverage equal to 10 to 12 times your annual income. Health insurance in the United States operates on a system of layered costs that most Americans never fully decode. Understanding those layers could save you tens of thousands of dollars. Your premium is the monthly payment that keeps coverage active. Your deductible is what you pay before insurance begins sharing costs. Your out-of-pocket maximum is the ceiling on your annual exposure. The trap that catches millions of people is choosing the lowest premium plan without calculating total potential cost. A plan with a $400 monthly premium and a $7,000 deductible exposes you to up to $11,400 annually. A plan with a $600 premium but a $1,500 deductible caps your exposure at $8,700. You save nearly $3,000 by paying more each month. In-network versus out-of-network is equally critical. Insurers negotiate rates with specific providers. If you receive care outside that network, you're often paying full undiscounted rates, and those costs may not even count toward your deductible. Before any procedure, verify your providers are in-network. Auto insurance is required by law in 49 states, yet 1 in 8 American drivers carries no coverage at all, and millions more carry policies that are dangerously insufficient. Your state's minimum coverage requirements are almost certainly not enough. Most states require $25,000 per person for bodily injury, but the average hospital stay after a serious accident easily exceeds $50,000 for a single person. When your policy limits are gone, anything beyond comes from your personal assets. Umbrella policies can add $1 million or more in liability coverage for about $25 a month. Dollar for dollar, it is among the most efficient financial protections available to ordinary families. Uninsured motorist coverage protects you when the other driver carries no insurance. Given that 1 in 8 drivers is uninsured, this coverage is essential, not optional. Insurance is the infrastructure beneath everything you build: your home, your savings, your family's future. They stand on ground that can disappear in a single afternoon. The families who recover from catastrophe are rarely the wealthiest. They are the ones who prepared, who understood that buying insurance isn't pessimism. It is a mathematical acknowledgement that the future is uncertain, and that preparation is what turns uncertainty into resilience. If there is one action you take after watching this video, make it this: schedule a review of your current coverage. Speak with an independent insurance broker who works for you, not a single company. Ask them to calculate your total potential exposure. The cost of being properly insured is trivial compared to the cost of discovering, at the worst possible moment, that you are not. If this breakdown helped you see your coverage differently, subscribe to Insure Smart. Every week, we decode the financial systems that shape your life, clearly, honestly, without the jargon. Because understanding what protects you is the first step to actually being protected.